CNBC TV 18, celebrating 15 years of leadership.
Hello and welcome to Markets Today. I'm Lata Venkatesh and joining me from the Delhi News Centre is Surabhi Upadhyay. Surabhi, now we can say with confidence that 2014 is the best year in 5 or 6 for the Indian markets, and they have indeed ended 31% higher in 2014.
Lata, hi. What a run for the market, and perhaps only befitting that we ended, of course, on a positive note as well. Let's run through the top stories. Markets end 2014 on a positive note. The Nifty gains over 0.4% on the day, 31% over the year. The Sensex closes above 27,500. Real estate and power stocks lead the buying today.
Midcaps outperform blue chips on the last day of the year as well, with the midcap index rising 0.8%. Suzlon surges 9% as CNBC TV 18 learns the company may sign an offshore wind farm project worth 3,500 crores with the Gujarat government. Logistics players like Gati and Snowman rise between 5 and 11% on continued reforms excitement.
Telecom stocks end higher as TRAI recommends a pan-India reserve price for 21 megahertz spectrum that's lower than the last 2010 auction price.
Auto shares remain subdued on uncertainty over central excise SOPs being withdrawn. Maruti chairman R.C. Bhargav says companies will have to pass on the hike in excise to consumers, adds that December has been a good month for retail sales.
And the rupee is all set to sign off 2014 on a firm note as well, rising as high as 63.80 in intraday on global unwinding of dollar longs. Indian traders also sell long dollar positions ahead of Jan quarter, which is usually strong for the Indian currency.
And April to November fiscal deficit reaches almost 99% of the full year target. Net tax receipts are only 43% of the full year budget estimates. All hopes now rest on divestment revenues and telecom auction receipts to meet the red line of the fiscal deficit remaining below 4.1% of GDP. Well, those were the headlines, and here are the experts that we have lined up on the show. Market perspective from Jitendra Sriram of HSBC India. As always, Sudarshan Sukhani will join us to talk about the technicals. On the corporate side, we get you R.C. Bhargav, the chairman of Maruti, to talk about the impact of the excise withdrawal. We also get you a whole host of experts to analyze global markets in the year gone by.
Okay, before we get to all that opinion, let's straight away get to the day's trading highlights. Dalal Street has ended 2014 on a positive note. Both major indices ended the day with some healthy gains in what was a range-bound session otherwise. Anuj Singhal is here with all that was making headlines today. Anuj, what a fantastic year and a good, strong and steady close as well.
The last day of 2014 was clearly a day in which bulls were in control, as they were all through 2014. So the market gained today to close at the high point of the day. Not at the high point of the year, that would be some regret for the bulls, but high point of the day is what we had. And midcaps again were big outperformers, as they have been through the years. In fact, the midcap index is up over 50%, while the Nifty is up 30% for the year. Let's talk about today's trade, though. Some Nifty gainers included stocks like BHEL, Ken, Sun Pharma. Banking did well again, so SBI, ICICI, Axis, all of them did well in trade. On the losing side, you had a couple of stocks like Mahindra & Mahindra, Tech Mahindra, and also HDFC Bank. And then really in the mid-cap side, you had some big stunning moves. Suzlon, DB Realty, both of them up nearly 20%. Amtech India was up quite a bit. Gujarat Pipavav, Unitech, and really stock of the day and of the year was Gati. That was up 10% today and up 500% for the year. So 2014 clearly would go down as one of the best years of Indian stock markets.
Oh, yes, indeed. Clearly one of the best years in recent memory for sure, especially after the long dry spell that the stock markets have had. Not only did they scale the January 2008 highs, they went on to set up new highs, and we will not forget that. Importantly, the Bank Nifty was a major anchor for the Nifty throughout this year. The Bank Nifty rose almost 60%, and within that, the PSU Bank Index threw up a good 65% in terms of gains. So was the anchor. The problem only will be with after such an extraordinary performance, whether 2015 will see these indices peaking off. We will have to see whether the weekend Gyan Sanchar for the banking sector throws up enough reforms to continue this exemplary performance of the banking stocks. Well, some market perspective, Surabhi?
Absolutely, Lata. Let's get in some views that we got earlier from Jitendra Sriram, Managing Director and Head of Research at HSBC India. He says he will be favouring the equity markets over debt going into 2015.
At this juncture, I would definitely be more positioned towards the equity markets, because I think we are at the cusp of a recovery, and clearly that will start getting built in over the course of probably the next 2 quarters or so. And as that comes in and we start playing the earnings growth trajectory and the uplift in earnings, I would expect that equity probably from here on should start seeing better returns than what debt has given you thus far. But we're talking about two really very different risk appetites out here. I would reckon that, you will have a situation that next year you will have this kind of a disconnect where globally probably you will start seeing rates starting to inch up because of Fed moves, whereas India could potentially have some degree of easing. Whether it happens in 1Q, 2Q, that is still left to how the inflation trajectory plays out. But I would definitely expect, and we are forecasting that we should see about a 50 basis point easing in RBI rates through the year.
All right, so that's the expectation with which we step into 2015. Now for all the action for the day from the futures and options space, let's go across to Varinder Bansal. Varinder.
Thank you so much. The last F&O link for 2014, clearly if you just see, 8200, 8300 consistent foot trading happening in, but someone was clearly hungover. You were seeing 9,000 call opening up and the open interest was going high over there. Don't know why it is happening, but clearly, apart from 8500, 8600 call, it was interesting to see the 9000 call was also opening up. Clearly, it was BHAIL, which was the biggest Nifty gainer, up nearly 2.5%. Open interest going up over there. It was all about midcaps today, and especially about the high beta play. Unitech was up by nearly 5%. There was short covering which was helping the stock moving up. Amtech Auto was up by nearly 7%. All these auto ancillary plays were just moving up 10-15%. Amtech Auto in the F&O space was up by nearly 7%. A bit of short covering helping the stock. But look at these stocks. As I said, the midcap was a flavor. M&M Financial up 3.5%. Open interest went up by nearly 10%. SKS Micro up nearly 2.8%. Open interest was up by nearly 7%. Mothers and Sumi was up 2.7%. Open interest moving up by nearly 7%. Strides Arcolab was up nearly 4%. Open interest was up by nearly 18%. And Mindtree, after a long time, the stock was up nearly 5%. And open interest was up by nearly 15%. But it was the entire mid-cap space, especially the auto ancillary space, which was buzzing.
Varinder, unbelievable, the 9,000 call getting so active. Someone's clearly started their New Year party pretty early, even before the markets shut, right? But overall, the year has been quite phenomenal for Indian equities. We've seen the benchmarks rise about 30%. Run us through the real highlights of the year gone by, the best performers, the worst performers.
Well, what a year it has been. Clearly, this is the best performance Indian markets have seen in the last 5 years. Where that government change which happened, which helped the markets, or the oil fall, you can put your finger on. But MSCI India has been the third best performing market in the world, in 2014. Last year it was 11, so huge jump seen over there. BSE Sensex, Nifty, BSE Midcap indices reached all-time high in 2014. BSE Small Cap rose to 7-year high. It's still down nearly 20% if you compare to 2008 highs, but that was 7-year high for BSE Small Cap Index. If you just see BSE Midcap Index and Small Cap Index, they've clearly outperformed Sensex. While Sensex and Nifty are up nearly 30%, but the Small Cap Index has moved 67% in 2014. Midcap Index is up nearly 52.5%. And if you're watching out for stocks, over 85% of BSE 500 stocks are trading higher than what they were trading last year. Well, not only that, as I said, we were helped by oil also, which is trading at 5.5-year low, and gold, which is trading at 4.5-year low in USD dollar terms. If you're watching out for sectors, 5 MSCI sectors were trading at all-time high, this year. consumer discretionary, staples, financials, healthcare, technology. It was not a good year for telecom stocks, which were trading in the red. But clearly, if you just watch out for Bank Nifty or the financials, Bank Nifty is up 64% in 2014, consumer durables 62%, and autos up nearly 56%. Not only that, the 10-year bond yields were to 7.83%, which is the lowest level seen in July 2013. FI's flow has been very strong, especially if you just see the debt market. They stood at $26 billion, which is the highest ever what they have seen. Also, good news that the domestic institutional investors were back and they were putting in money after a gap of nearly 3 years. We are watching out for stocks, focusing only on Nifty. As I said, banking or the financial stocks have been big gainers this year. You can't put your finger on, but Axis Bank has been one of the strongest stocks in Nifty, up 91%, followed by IndusInd Bank, PNB, SBI, Kotak Mahindra Bank, Bank of Baroda. All these stocks have gained anywhere between 64% to 91%. Maruti again has been very strong, up 91%, accompanying Axis Bank. BPCL, Anuj has been pointing out, that has been one of the best stocks of 2014 in oil and marketing companies. Mid Pharma, it has been Cipla and Lupin, which have gained anywhere between 45% to 55%. L&T up 40%, ITC up nearly 14.5%. Some of the Nifty losers in 2014, you have to blame call auctions. Jindal Steel is down 45%. K in India, of course, dragging with that oil price, down 26%. DLF and many stories, that stock is down 21%, so underperforming over there. And two Tata companies, Tata Power and Tata Steel, down nearly 7.5%. But you can't take it away. It has been a fabulous year for most of the equity investors.
And you put in a fabulous effort, Varinder. Go and enjoy what is left of 2014. Thank you so much for joining us. Well, moving on, the government has kick-started the process to reform India's public sector banks. Or has it? That question is still open. The post of chairman and managing director for 4 public sector banks has been split. Mr. R. Koteshwaran has been appointed as MD and CEO of Indian Overseas Bank. He was previously executive director at Bank of India. Animesh Chauhan is the new MD and CEO of Oriental Bank of Commerce. P. Srinivas from Bank of Baroda has been identified as the person to take over the MD and CEO position at United Bank of India, while Punjab and Sindh Bank's KK Sansi is the new MD and CEO of Vijaya Bank. Now, a Finance Ministry statement said that in a significant departure from the past practice, the Government of India has decided to now separate the post of Chairman and MD and CEO. The procedure for selection of the part-time Chairman will be announced shortly.
All right, Lata, let's also talk about the auto space. Of course, auto stocks remain subdued. Companies are hoping that the Finance Ministry will be extending the excise duty cuts on automobiles and consumer durables beyond today. If that doesn't happen, it will make these products costlier from next year. That's tomorrow onwards. The duty cuts have hit the government collections by about 2,500 crore rupees a month. Now let's hear out Maruti's R.C. Bhargava talk about how the auto industry is viewing this development.
So far, we have received no communication at all. Of course, one way is looking upon it is that if there is no communication, it means that automatically it stands withdrawn as of midnight tonight. I don't think that these kind of changes in prices which will ensue will have any long-term impact because, we've lived through all kinds of tax rates in the past. And they do have a temporary impact, but over any long period of time, it doesn't really matter.
All right. So that's taking a very positive view, a sanguine view of the duty hikes if they happen. Time for a break now, but coming up, Sudarshan Sukhani will join in for a technical chat and we will also get you a report of the TRAI's latest recommendations. But before that, let us leave you with some thoughts from global experts on the world economy.
My guess is that this time next year, oil prices will be higher than where they are at the time of our conversation. Because I think that if they continue to drop, there's going to be negative supply-side consequences in the shale industry in the United States. So I don't think prices will stay this low, but given the momentum we've got, I think we'll start off 2015 probably with further weakness.
I think the actions here of the oil producers are very important. There's a lot of debate about how long they'll let this go down or they can let it go down. So I think we've seen a big change in commodity prices. I don't think I'll expect to see much more along those lines. Here, I'd say there's also this sense of what kind of stability we're going to see in the policy side. I think at this point, if you see some more stability, you'll see a greater, if you like, stability with respect to commodity prices. I don't see major changes going forward.
The rapid expansion, at least so far this year, of U.S. shale oil production, cutting U.S. imports massively, and the de facto breakdown of OPEC as an effective cartel. So for oil prices too, I see prices going down and testing some really low levels.
CNBC TV 18, celebrating 15 years of leadership.